Welcome to The Deal. I'm Suzanne Stevens reporting from The Deal's M&A Outlook 2009 conference. I'm here with Jim Kuster, and Jim is a managing director with the Telecommunications, Media, and Technology Investment Banking Group with RBS. Jim, thanks for stopping by.
Happy to do it.
I want to ask you, what is your, from your vantage point, what are your expectations for 2009?
I do see a fair amount of opportunity in deal making as prices come down and as seller expectations align themselves. In spite of the fact that there's very little leverage finance available, you have seen already in this quarter some stock-for-stock deals that have made sense on a relative value basis. And so I think corporate deal making is going to first evolve from stock-for-stock structures with the assumption of existing debt, and then from there, wherever there's a portable component to the capital structure, those types of deals will continue to be able to get done. And gradually, I think later in 2009, as the debt markets settle and equilibrate themselves, I do think that will also come back.
We could see some more liquidity.
Yeah, not to the extent that we had, a year ago, but certainly there's going to be capital put to work on the part of debt providers as well.
What size deals do you think we'll see getting done? Middle market, big transformational deals?
I do think the middle market will be active. It'll never be what the large cap types of deals, and we were involved in quite a number of the big ones from 2007, including the one sort of last deal that has yet to get done, BCE, Bell Canada, which RBS is one of the 4 underwriters for. So we've been really up to our eyeballs in making sure that's going to get structured as best it can given the circumstances, and then we'll be patient about how that deal gets distributed. So that type of deal making is really off the table from this point on. I just don't think that those mega deals are going to come back in the foreseeable future. But there is appetite in the billion to 5 billion range on the high end, and then certainly in the middle market.
Jim, any particularly active sectors in your space? You're in the telecom, media, and technology.
Yeah, actually the tech space is fairly active. You've seen a number of deals in the software space in the second half of 2008. I think that some of that's going to continue. The media space is under a lot of duress because of the ad recession. Traditional media in particular is really in workout mode. I mean, the newspaper sector is really into restructuring. Radio is headed there. Consumer magazines also. All those businesses are in major cost cutting and major restructuring kind of mode. So I don't see a lot of healthy kind of deal flow from that area, but I do think from the tech sector and the telecom sector too. For example, Verizon's acquisition of Alltel is going forward. As part of that, up to 100 markets have to get spun off for the deal to close. So there's bidders actively looking at those markets as an acquisition opportunity.
Jim, we've got a new president coming into office, a new Congress. What are your expectations for an Obama administration and what the impact might be on deal making?
Well, I do think that economic pressures are going to keep his strategy fairly well checked. I don't think any drastic steps are going to be taken early on because the economy is just too fragile for a major tax increase. He ran on a platform of some increases for the higher income levels, but I do think that he's likely to be patient. He's got good advisors. I look to Warren Buffett, who admits that he's paying less as a percentage of taxes than the woman who comes in to empty his wastebasket at night. So there probably will be some rationalization there. I don't know if that'll really affect deal making per se. I think that the administration has to be conscious of what's going to keep employment going, and that will likely facilitate some deals.
Jim Kuster with RBS, thanks for stopping by.
Happy to be here. Thank you.